Okay, let's say you want to start your investing today. Okay, might be because you've heard in news or you would have heard people say if you've invested in stocks like TCS, Infosys 10 years back, how much return you would have made by now. Or simply you want to start your investment today, but you're not exactly sure what you need to know, where to invest, how long to invest, how much to invest, what is the return that you can expect. So there are a lot of questions like this, and there are also a lot of confusing factors because there are already over informations that has been shared. So in this video, let us break all these things into the simplest form, right? Not using any big definitions, any crazy definitions here, but we're going to keep things very simple, and we're just going to understand with few examples on what you need to know in order to begin investment. To begin with, right, the first question is, what exactly is stock market? You would have heard people say stock market is up by so much points, it's down by so much points, I made so much money in stock market, I lost so much money in stock market. What exactly is stock market, right? So let's consider an example. We have this company X, okay? So this company wants to grow, it wants to expand, and it needs money, it needs fund from outside. So there are many ways, and like banks, loans. So one such way is to get help or get investments from the public, right? So when I say public, now let's consider a product. Okay, so let's say you are buying a product of Nestle. Okay, this is the product. Okay, so as far as you have this product in your hand, you are the consumer, right? So once this product is over, the relationship with you and the company is over, right? But whereas if you're investing in the same stock of Nestle, as an example, if you're investing rather than just consuming the product, if you're buying a particular stock of this company, you're going to become a part of it. It can be 0.1%, 0.2%, but you're a part of this. So as this company grows, if this company grows, the investment that you've done also starts growing, which is called as profit. If this company is facing some crisis, has some negative results, has not performed well, it is going to go down. The value of this company is going to go down. The investment amount you have done also starts going down, and it shows minus so and so, and you're in loss, right? Simple. So here, market is a place where you buy and sell things, right? So stock market is a place where you buy and sell stocks. Simple as that. Okay, now the second thing that comes to our mind when we say stock market is charts, right? You can see people, you can visualize people staring into the charts, colorful green, red lines all over, patterns and everything. Simply you will be able to see charts or price movements, right? And it is never going to be like this constantly in the same line, right? It always keeps moving up and down, it keeps having its ups and downs, it keeps moving. So who moves these prices? Who is responsible for the movement of these prices? So getting back to the example, there are buyers and sellers, like I said, right? And let's consider an example, quick example again. And we are in a vegetable market. So there are only two people, right? Buyers, that is people who want to buy something, and there are people who want to sell something. There are two people. Forget about the distributors and other people there. There are two main people, buyers and sellers, right? So by nature, a buyer's mind, if you're about to buy something and if I say you the price for a particular thing is 25, he would definitely want to bring it down to 20 or 15 or 10 and would want to buy it at the low, right? Vegetable, iPhone, land, car, anything that you take, a buyer's mindset by nature would be to buy at the low and sell at the high, and in between whatever he makes will be the profit. Yes. And if you're a seller, now you're the person who's selling vegetables, you're selling it at 50 rupees. Okay, you've got these vegetables from outside for 50 rupees. Okay, 50, and you're selling it off to another person at 15, that is 15 rupees. Do you think you will be in profit? Of course not, right? You're in loss. So by seller, you don't want to sell it at the low, but you want to bring it to high. That is, if you're getting 50 rupees for this vegetable, you want to scale it up to 75, 85 or even 100 and want to sell it at the highest possible. So in single line, if we have to conclude this, buyers would want to buy at the lowest price possible and sellers want to sell it at the highest price possible, right? So we have another concept which is called as supply and demand, which is very similar to this. Let's consider you have a car, okay, which has been there with you for many years now without any use. It's just been there, okay. So you have decided to give away this car for 25,000 because it is of no big use, and you thought of giving it away, right? And all of a sudden this car is in the talk, okay. You see news articles about it, you see news channels talking about it, and you see people making it a viral thing because this car was initially owned by Rajnikant, okay, an example. So now the value and the demand for the car is slightly increased, okay. So initially you were in an idea, you were in a plan to sell this car at 25,000, right? But now there are people who are coming and asking you, not like one or two, but hundreds of people who are coming and asking you if you want to sell this. Now that the demand is more, so will you still be selling this car at 25, or would you want to increase the price? You would definitely increase it up to might be 2.5 3 lakhs because the demand is high, right? Even if you're selling it at 3 lakhs, people are ready to buy. In that case, being a seller, you want to sell at the highest price, right? The more the demand, right? Any certain thing, the more the demand, the price starts going up, right? Before the demand, you were even okay to sell it at 25,000. Because the demand was high, the price started going up. You increase the price from 25,000 to 2.5 lakhs, right? So the more the demand, the price starts going up. The more the supply, the price starts coming down, right? Simple example, if you're just relating it with the stock market, one particular stock is at a base, at a support level, okay, and there is also double bottom at the base. And along with this technical analysis, there is a news that's coming out that this company has performed really well. So along with me, there'll be thousands and lakhs of people thinking the company has performed really well and it might go up, right? Because they are anticipating it is going to go up, the results are good, they're going to start buying. So a lot of people buy and push the price up, right? And this is for buying. And if you take for the selling factor, now let's take COVID. So COVID happened, and all of a sudden people were exiting from all the positions, right? There was full of panic everywhere, fear, like what's going to happen, what's next. It was fear, but it's acceptable, right? Now if I'm going to unleash a dog right now, an aggressive dog which is coming straight at you, barking at you, will you stay calm? No, right? You're going to panic, you're going to fear, you're going to, might be, if it was me, I would have ran away from that place itself. So that is panic, right? You cannot blame, but that is the psychology of people, right? People would have had their portfolios in 10 lakh profit. Slowly it started decreasing to 5 lakh, 3 lakh, 2 lakh, 1 lakh, and they started seeing it in negative, right? So because of panic, they started shorting the market, that started exiting from the positions they were, and which led to further downfall. So when I say downfall, it is not going to go down to zero or to the base level, but somewhere like the buyers, there will be buyers waiting for the price to get to the lowest point so that they can buy. Because in the past 5 years, in the past 10 years, I haven't seen Nifty or Bank Nifty or any certain stock at this price. So this is the least the price can go, and I'm going to buy here. So there'll be buyers at the base level and there'll be sellers at the high. So this is how the price keeps moving up, because there'll be buyers buy, they take the price up. There'll be sellers who are selling it, and this makes the price keep moving, right? And if you see in this Zerodha, at this particular point here, you can just click here, and in this section, you can see there is this column indicates buying. The more number of buying happens here, the market starts going up, right? And the more number of selling orders happen here, the market comes down. So this is what moves price up and down, right? Now that we have understood what basic stock market is, what do you buy and sell, we have also understood the psychology, which is a very important part, because if you understand where exactly is bull trap or where exactly is sell trap, even if you're a trader, if you're an investor, it is going to be a very beneficial thing for you. And now that we have understood these two things, where exactly do you buy? On what basis do you buy? So now in India we have NSE and BSE. Okay, so NSE stands for National Stock Exchange and BSE stands for Bombay Stock Exchange. Under NSE comes Nifty 50. Okay, and under BSE comes Sensex. So forget about BSE for now, but just focus on NSE. Okay. So under NSE we have Nifty 50. So what exactly is this Nifty 50? So Nifty 50, under Nifty 50 we have 50 other stocks. Okay, so there is always a wrong idea that if Nifty is going up, these 50 stocks are going up, but that's not the case. These 50 stocks move well in order to which Nifty starts moving up. Nifty 50 is just a representation of these 50 stocks. Okay, so Nifty 50 is an index. So whenever you want to say India is growing or India's status is good, people can take up Nifty and say, okay, Nifty is performed well, so markets are performing well. Right, so index is something that represents all these 50 stocks here. So when I talk about these 50 stocks, we have 13 different sectors. It can be IT, it can be automobiles, pharma, banks, finance. There are 13 other sectors which has been shown below. So here these are the different sectors we have, right? So first comes NSE. Under NSE we have Nifty 50. Under Nifty 50 we have 50 stocks, right? So when I say about these 50 stocks, they are put into different categories. That is, the percentage, the weightage of each stock differs. Okay, so if you take in this list, the top one is Reliance, which has a weightage of 11%. And here you can see there are different companies with different percentage of weightage here. Okay, so you can invest here, but when I say, doesn't mean you can only invest in these 50 stocks. Okay, apart from these 50 stocks, you have other stock as well, which just comes under the NSE. NSE has an overall of 2000 stocks, so it can be under that category also. You can, it doesn't mean you have to only invest within Nifty 50, but within Nifty 50 are the highly performing, highly contributing, highly known companies which are a part of the country's growth as well, which comes under the Nifty 50 category, right? So this, until this, I think it would be clear for us. Now that we know Nifty, NSE and all these things, we also similarly have something called as Bank Nifty, right? So in Nifty 50, we had 13 different sectors and 50 different stocks, right? But in Bank Nifty, it is just going to be one sector, which is banks. That is HDFC Bank, ICICI, Axis, Kotak, SBI, all these banks come under Bank Nifty. Okay, so you both are being considered as a similar thing. You can also invest in Nifty 50, you can also invest in Bank Nifty, right? So much is clear. So on what basis do you invest? On what basis do you start your trading with? So there are two categories. Okay, you can either become a trader or you can become an investor, right? It is up to you to decide which one you want to be. So if you want to become a trader, right, like any other profession, doctor, teacher, advocate, like any other profession, you need to invest regular time period and regular efforts into the trading business, right? You need to be in front of the charts, you need to understand at what level it is, where we are playing at, and what is the upcoming event that is happening. So you should be simply updated about everything, and you should be able to invest certain amount of time and effort on a regular basis, right? It is not like you're gonna do some other work, invest something and not gonna look into it and you're gonna miss it. That's not how it works. But for trader, you should be able to fully focus on it, and you should be able to generate a living, or you need to make a living out of it, right? This is for trader. So in order to become a trader, what are those things that you need? The first thing that you need to know is technical analysis, right? There are a few things like technical analysis, fundamental analysis, risk management, psychology, all these things come into the play, right? See, I just met a person a week back, and he's a CEO of a particular company, and he said me he was into options and he lost 50 lakhs, right? And only after losing 50 lakhs he came to know there is something called as technical analysis, there's something called as risk management, there's something called as hedge. Okay, people do this mistake, not just a person who has invested 10,000, 20,000, but many people do this mistake of first investing a huge money, first thinking that trading is easy, I can do it, without even being aware of a few things. They invest a big money, right? And then only they understand there's something called as technical. After losing 50 lakhs, what is the point of learning technical analysis? Right? After losing 50 lakhs, he learned technical analysis and he went into the mode of revenge in order to get back his money, right? In order, he lost more 25 lakhs. right? You shouldn't be this person. No one should be this person, right? So in order to become a trader, you need to learn, right? You need to invest your time and start learning about few things. Then slowly add your capital, very, very minimum, like 5% initially. And then once you're able to understand what is your phase, what kind of a trader you are, from there you can scale it up, right? Not like this person first investing the money, making the losses, and then saying, okay, let me learn again on the revenge mode, let me lose 25 lakh more, and then blame the stock market like it is a risky game. It is a risky game, right? So you need to be aware of all these things. So if you are thinking you've bought this far, but where exactly do I learn technical analysis from, right? So I'm here, the link is below, the WhatsApp link is below, the website link is below, all the important links are below. You can always send a hi and I or my team will get back to you. But in order to give a 1 minute intro of what the course is providing, so it begins from the start, right? Even if you don't understand anything, have no idea of what it is, you will still be able to get through the course, because it starts from candlestick. What does each and every candle mean? From there to what are the phases, what are the different kind of phases in market, how to draw trend lines, how to trade them, how to identify key levels. Market is all about key levels, right? You should understand where exactly the support is, where exactly the resistance is, and from there how to draw patterns, how to catch the breakout stocks, right? Intraday strategies and swing strategies. From there, it just doesn't end there. We also have included about options, because there are a lot of people getting into options now, not even knowing it. It shouldn't be like, okay, take this course and separately take this course. It has all been combined into one. The basic introduction of options is being included, option buying is being taught along with option selling, right? So it is not going to be like I'm going to teach you one magical strategy that is going to work 100% in all the time. There is no such thing, right? So here you will be taught different methods. So based on the market condition, understanding how the market is playing, you can decide which strategy to use and take a trade. So everything will be provided, and also apart from this, you will be given a 3 week of support, right? It is not just learn something and leave. Whatever we have learned, we will use that 3 weeks of time, and we are going to implement it in the live market. From there, you will be getting an idea of how things work. Okay, so that was a quick intro about the course. So getting back, right? So now for the traders, it is over, right? If you already know all these things, then you're good to go. You're on the right track. And even then, if you're facing problems, or even then if you're facing losses, then there should be something wrong with the risk management or the psychology part, right? If you're just looking into it, it will all be fine over a period. So now it is over for traders, right? You've understood what are the things that's needed, where exactly you can learn, everything we've seen for traders. So let's now talk about investing, right? So if you have a question, who can invest? To answer that question, if you're a student in your 20s, right, with your pocket money of 500,000, you want to start your investing, or you're a person who is already having a day job that is from 9 to 5, but who says, I cannot invest so much time, but I really want to start my investing for them, right? I want to have a retirement plan, I want to have a family health plan, or I want to have my kids education, or I want to build a home, car, anything. For these people, you can start your investing. And for people who are homemakers, right, we have a lot of women traders in the community who think, I have a kid who is in school, and before my husband comes, I'm in home, I have this much time where I can invest this and make a fortune out of it. Again, it is for you, right? And if you're a person who is about to retire, or who is already retired and want to make use of the opportunity, simply investing is for people who want to build wealth, right? Or who want to make use of the compounding effect and keep doubling, tripling your amount. So when I say doubling and tripling, don't please expect it is going to happen in 2 or 3 years, right? It is going to take you a few years, like 10 years, 15 years down the lane, in order to make that amount. There's no shortcuts, right? So the next question is, where can I start investing? Where should I invest? But before we get there, I want you all to understand the power of investing. Let's quickly see an example, okay? So let's say Mr. Loganath, okay, in his 20, he wants to start investing. By the way, Loganath is my dad, and he's not in his 20s anymore. But back to the example. Loganath wants to start his investment, okay, at his 20s. So he wants to invest 1,000 every month for the next 30 years, right? And there's another person called as Ramesh. Okay, so the second person, Ramesh, right? He saves the same amount, 1,000 every month for the next 30 years. So when I say saves, it is like our grandmas and aunts did, right? Where they used to keep all the money under the beds or under the dabbas for years and years, right? I'm saying that. So now Ramesh saved the same amount as Lokanath. So Ramesh made a total amount of 3,60,000. Right? So by end of 30 years of his savings, he had a grand total of 3,60,000. Okay, but Lokanath invested the same amount, right? 1,000 again every month for the next 30 years. Had a grand total by end of 30 years, 35 lakhs. Okay, you can do the comparison again, like between 3,60,000 and 35 lakhs. If you're thinking the calculation must be wrong because it can't be such a big number, no, you're wrong. This is the compounding effect. This is the power of investment that I'm talking about. So if you're investing a small amount for a regular time period, right, it is going to give you a good return because you're making use of the interest as well. You're going to get an interest of say like 10-12%, and by end of this year you would have made so much, almost 10 times more of what Ramesh did. So in order to calculate the percentage or how much you have to invest, right, not 1,000 is not applicable for everyone, right? You might have a different plan. So here is the formula, but I'm not going to bore you guys with these formula things, but I have the link below. Okay, so here if you take the first example of Ramesh, he saved 1,000, right, at 0% interest for the next 30 years, and he made a return of 3 lakh, and he made a return of 3,60,000, right? And again in the case of Lokanath, you can see he invested 1,000 rupees at the interest rate of 12% for the next 30 years, and he made by end of the 30 year he made 35 lakhs, right? So you might have a different goal. You might want to make 5 lakh by end of so much years, 10 lakh, or 1 crore by this much years. So you can type the end amount here and see how much you have to invest, the calculation part here, so you can feel free and work around and decide what is your plan and how you can start your investment, right? So every time I talk to this about my clients, there'll always be a kind of pain or regret saying, why did no one talk to me about this earlier? Why did no one educate me about these things earlier? But I think it is never too late for anything. You can start your investment today. You can start anytime soon, and still you will be able to make something out of it, right? So now, how exactly do you invest? So you can always see and hear people say, you would have made so much, you would have made so much, but how do you do that? Right? Because a lot of people have Zerodha as their demat account. We will go with the coin because the UI and the customer support is also very well. Again, this is not a sponsored video. So here I'm going to prefer coin by Zerodha. Okay, so if you're already having a demat account, so here at the login page here, you can see it is asking for ID and password, right? So only if you have a Zerodha's demat account, you're going to use the same ID here and login. Right? For people who don't have a demat account, you can just quickly go and type Zerodha account opening, or you can see a lot of videos on YouTube already which explains you in detail. That might help. So after creating a demat account, you can use the same credentials to this app, which is Coin, okay, and you can log in, right? Okay, now that we have logged in to Coin with your ID, like I said, okay, we are here in the investment page, okay, and here you can see something called as portfolio, SIPs and order. Go to SIPs and you can click explore now, okay, and from here you can select index fund, right, and the first one is UTI Nifty 50 index fund, and you can select UTI Nifty 50 index fund, the first one. And here you can see, right, we have CAGR for the next 3 years, that is the expected return. Okay, you cannot expect it on you cannot expect what is going to happen in the next 3 years, so you can just forget about this. Exit load is something that the service charges they're gonna detect from you, which is 0. Again, you need not worry about it. There's something called as minimum investment, that is the initial investment. The starting, when you're going to start this investment, initially you're going to pay 5,000, and from there the installment, the monthly basis, the monthly plan is going to be 1,000. Okay, but if you think 5,000 is too much for me, I cannot right away invest 5,000, you can type in Navi. Okay, sorry, you're gonna type in Navi, right? The first one here, you can click, and you can see the minimum investment is 10 rupees. You can, again, the CAGR and all, you need not worry, but when it is Navi, the returns that you're going to get can be comparatively low, okay, compared to UTI. So it is better, the better option when in terms of returns is UTI. So you can save that 5,000 up, and then you can start your investment. The installment amount is 1,000, right? So based on your capacity, if you are okay to invest 5,000, 10,000, 15, 20, it is up to you and your capability on how much you can invest, and set your installment amount here. Again, monthly frequency, and the date is going to be every first. Okay, the increment percent would be 1. Okay, and November 11th, I don't want the amount or the plan to start today, but on December 1st. So I'm just going to change it here and create a SIP here, right? So that is how you create a SIP. Okay, and anytime you feel you want to pause it, or there's some crisis that happened and you cannot pay that particular month, you have a button here. You can pause, you can delete, again you can continue when it is okay for you. So this is how you invest on a regular basis. So yeah guys, that is it for this video. And one request I have for you guys is, if you're starting your investment today, do not expect 100%, 200% return in 1 or 2 years, right? Because this is a long term process and it is definitely going to take time. At least have a mindset to keep it for 15 years, 10 years at least. Only then you will be able to get use of the compounding effect that's happening. And also you don't have to overlook, okay, when you're investing slightly like 1 or 2%, it will be up and down. You don't have to worry about it. It is for a longer period, 10 years, right? So it can happen. Your only focus should be on the installments. Make sure you do the installments on that particular time, and the rest will be handled. So that was it. And for all the examples that you've seen today, if you felt it was lame, that is something that struck me, and I just wanted to keep things simple, like market, car, house, so that everyone will be able to understand. And if you've liked and learned something new in the video, do let me know in the comment section. And yeah guys, thank you for watching.